Everybody, today we're going to be looking at a stock, Unifi Inc. UFI came with my screener, um, trading at $123 million market cap, and it hit a peak of $30 and is now down to $6.74, which there's a lot of reasons for. So let's get right into the analysis. I already pulled up the newest balance sheet. I'm going to put this over here. Oh wait, no. I'm going to leave it, and then I'm going to obviously pull up my Excel, and we're going to start it off like we always do. Guys, remember these are just quick analysis of the balance sheet. This company is going through a lot, so let me just write this down. Equivalents, receivables. This company is very interesting because I did an analysis before on it back in the day, and it was really cheap. But there is a problem that's been going on with this company for about, I think we're going on a year and a half, might be 2 years now. But basically what happened was during the whole stimulus pump and everything that happened during 2020 through 2022, and then supply chain issues, these companies, retail companies specifically, would buy up a bunch of inventory, and it led to a oversupply of inventory. So a lot of these companies went through something called destocking. And UFI, obviously, because UFI is a high fixed cost business, when that happened, this company just started losing. I think they're losing about 20 million a quarter right now. All right. So let's start off with the cash. I'm just writing all this down. 27 million, six. Okay. Damn, that cash position is dropping. Let's go see what these receivables are. But yeah, this company is very interesting because what UFI is, it's a recycling textile or green textile. They use bottles and stuff like that to make yarn, and then it's used in a brand called Reprieve. Hold up, I might have to go to the 10K to see, but very sorry guys. You've seen is basically live. Let's see. Receivables. Okay. What the hell? Let's see who owes them these receivables. Because as you've seen in the Tusk video, guys, this is important. You got to see who owes them it. Unifi believes that there have been no significant changes to credit risk. Okay. Alrighty. Okay, here we go. Customer receivables. Main. Alright. We just want to see, guys, if there's any risk with these customers. One direct customer. Okay, here we go. So Unifi's top 10 customers account for approximately 26% and approximately 28%. Okay, so that's a good number to sit on. Is that now we know that their customers are very diversified. I wonder what their biggest customer accounts for, but we got the top 10 with that account for 26% of their net sales and 28% of their receivables. So let's write that down. That is 10. All right, guys. Just write this down. Damn, the market is crashing. This stock is up. All right, so we're gonna put that in. Okay, let's go back to the balance sheet. Let me go back. So let's just put. Obviously, you know what I should do? I should just write everything down and then go into it. They have a lot of inventory, which I mean, it is a. They work with clothing and stuff, so it is a manufacturer. So this is no, I'm gonna have a bunch of inventory. And then they have other current assets of 9 million. So let's let's put a regular thing on these inventories. I'm just gonna do, let's say 20%. Let's say one of these guys go bank, or let's say a couple of them don't pay it. And then I think I'm gonna, let's see what this inventory is too. Let's see. Yeah, and you can see here, guys, like their sales are just crashing. And I mean, this is when you got to get in when it's down, because let's see, there isn't much. Let's just say, let's just put a regular rate on it. Just doing quick analysis on it because I am limited to 30 minutes of video with this current thing I'm using. All right, so let's put that there. I know you guys can't see it what I'm doing, but I'll put it over on the screen when I'm done. Okay. Alrighty. So this is what we got so far. I mean, we like these receivables spread around 10 customers. I don't know who's the biggest one and who accounts for the most, but I just put a regular rate on it of 20%. If some of those guys don't pay, inventory, I did 40. And one thing about it's a renewable textile company, but one thing here, let me put this over here, and then I'll talk about it. I think a Swedish textile company, I think, just filed bankruptcy. So this industry went through a phase of ramp up. I think every company went through a phase of ramp up during the 2020 to 2022 stimulus money and basically unlimited money coming in with the Fed. And now we're seeing that these companies, they thought, oh, it's a demand for our product. When in reality, it was just a bunch of fake demand for their product by super low interest rates and that money printer going. All right, now let's get these total liabilities. We got 204 million of total liabilities. Looks like 77 million is current. Okay, see, that's also how you kind of gauge bankruptcy risk. They have like almost 3x the amount of current assets than current liabilities, which current liabilities, if you don't know, are liabilities that are due in a year. Let's just go total liabilities, and they have total liabilities of 204, 809. Right, so let's go total assets now. I'm about to get the fair value. Okay, let me put this over here since I'm already kind of done. All right, so let's go total assets. So that set 15 million. Then this is going to be our fair value. I'm gonna see. Boom. Let's put that there. 200. Let's times it by 1,000, obviously. $208 million. And then let's go get the shares. And it should stay up here. Always your shares outstanding are going to be on the top. Unless sometimes I see with ADRs, they do not have the share count above. Then you just go down to weighted shares outstanding. All right, so we got 18 million. Okay, then we want to go equal sum. that divided by that. We got 11.42 a share. Now, when I did this back in the day, this is just going to show you how much this fair value has to like eroded because they're losing. I think they're losing about 20 million a quarter. So the fair value is, you know, getting absolutely wrecked. Let me look at their liquidity position actually too, because with these type of companies, you want to see their liquidity position. They might list it. Let's see if they do. Or I might have to just calculate it myself. As of March, okay. So is that 47 million they have? Okay, so liquidity. So they have about 47 million in liquidity. Actually, let's just go up. I'm gonna write that on the sheet because when you're looking at these companies that are kind of going through cycles, that's what they're going through right now. Oh yeah, let me put the current share price. Well, it's the current share price. It is on a run these past days. I mean, it went down pretty low. I think it went to like $5 just a couple days ago. Now it's on a run. And I'm like, I already did an analysis. I'm like, you know what? Let's go back to this stock because it was pretty cheap. And I did read the earnings call. I'm going to get to that when I'm there. But let's do the upside. Or oh, okay. Let's do the. It looks interesting. Let's see. Sorry, guys. It's like I try to do this quick. Right? Is that correct? Yeah. That's more than. Hold up. See, guys. You know, sometimes you make mistakes, and okay, here we go. Times -1. Alrighty, let's put that in percentage. So it's got 69% upside right now. Or your margin, or your margin of safety, I think is like your margin of safety. This is wrong. This is the current upside. Your margin of safety is like it was 40% margin of safety. All right, guys. So this stock, I mean, it looks cheap right now. But let's go back and let's see. So that's the earnings call I want to come up on. But sorry, guys, I'm feeling sick. All right. So let's actually look at the net sales and let's see what's going on at this company. So you can see here, guys, they lost 10 million this quarter. So they are losing money. And if they keep losing money, then the fair value obviously is going to keep dropping. But one thing I want to say is this, is that I was in this, and you can see here that they've lost $43 million, and they have inputted I think, $15 million cost cutting. So they are trying to cut cost. It's not looking good, and if you read the earnings call, this earnings call was, I mean, even though they did pretty bad, the earnings call was quite bullish. And that's probably why the stock has gone up the past days because people are seeing this. They're like, okay. So Albert, you know, guys, I'm not good with names. Albert Carey, I'm gonna say. Eddie and AJ are going to take over. Let me see. Okay. We continue to experience the softness in the apparel category and the high inventory levels in that supply chain. However, there are signs of a gradual pickup in our sales, and that should continue as we go through the balance of fiscal 2024. So for the next 6 months, the industry has had a solid end of the year. The one thing I want to find is where they talk about destocking, because that's the big thing. So we want to see. Okay, here we go. This is what the part I'm trying to show you guys. The industry has had a solid end of the year apparel, so inventories appear to be pretty much back to pre-COVID levels. So this inventory destocking is starting to stop, and one of their competitors in Brazil did go bankrupt too. So we're starting to see bankruptcies, and it's basically becoming the strongest survive, and whoever makes it through this cycle will pick up obviously um, that demand, and that's what we're seeing. We found some weakness in our business, and yeah, they are cutting costs, and I think they did a restructure of their management too. And then this guy, the weird thing about it is that they say destocking is ended, but this guy is saying we continue to see these problems uh, in the year 2024. So this is why the stock's probably going up, because if you think that this company can get to those, get back, and the inventory levels go back down, then this company has about 70% upside from here. And we did a pretty deep, you know, what's it called? Pretty conservative analysis. So this thing's probably worth about $12 to $14 a share. And if you think that this company, that inventory is going to drop and retailers are going to pick up orders, in this company, you're probably going to get about maybe you're probably going to make about 100% on your investment. Um, yeah, you can see as global apparel inventory destocking should be nearing its end, allowing us to make more strategic decisions in how we position. So this is good. This is a good sign. And I remember reading through this and I saw something else. Yeah, they're cutting costs too. And I think they did give forward guidance, because this is the thing about forward guidance is when you get forward guidance, you put some certainty into the market. Um, because I was in a stock before named Helix, and they didn't give forward guidance for 2 years, and the stock was trading at like 70% discount, and they just weren't giving forward guidance. And obviously, when you don't get forward guidance, you just leave a lot of uncertainty in the market. And when there's uncertainty in the market has trouble pricing it in. And you get these huge discounts like this. So now they gave some certainty to what's going to happen in the upcoming quarter, and they gave their forecasted third quarter. Net sales between 149 million, 145, adjusted EBITDA between minus 2 million and 1 million, 45 million. So they're optimistic. And if you think they can rebound, I've already said it, like, I don't even know how many times, then it will probably be a doubler. Let's see if it's at 674 a share right now. Yeah, it was just, I don't know, this stock is moving so odd. Like, looking at, like, what the hell? It's like a jumping on a trampoline. Like, this shit's crazy. So you got, yeah. I mean, if you can get it for $5, it might be a good risk return. But they have 40 million liquidity. They're losing about 10 million a quarter. So do the math on that. Could they easily go and get a new loan? Yeah, because I mean they have, you know, 200 million more assets than liabilities. So I mean the bankruptcy risk. I mean, people might say it's high because they're losing money, but they do have a lot of assets that they could get secure loans on if they wanted to. But I don't know. There's a lot of things going on at this company. Um, yeah, they're losing 50 cents a share. Yeah, they've lost. You can see here, they lost 240 a share and 172. So their fair value has dropped significantly. I mean, that's a huge amount of, what is that, 240 plus 172? It's like what? Four or more? Yeah, four something. So I think that'll end the video, guys. It's a very interesting play if you believe in that consumer spending is going to come back to buying clothes in retail. And I don't even think I talked about what they even do. Let's go on their website. Oh yeah, I looked at the textile jobs to see if they're hiring. Because that could mean they're hiring for more positions, then that means demand's coming back. But basically, what they do is they take plastics and then turn it into clothing. And one thing about this clothing is it is for higher end customers, and that could be why. I mean, this is the thing about the consumer. I don't think they really care where the clothes are made. I don't. I think the only way that maybe they start to care is if governments put in place max carbon emissions for these fast fashion people, and I think H&M just announced about like 2 months ago, 3 months ago, that they are starting to get into this and making their own brand of renewable textile manufacturing, which basically allows you to keep reusing the clothes, which is good for the environment, because fast fashion is a huge part of global warming. So I mean, if governments put in place a max carbon emission, then UFI's order would probably skyrocket. But will that happen? Probably not, because I mean, it could happen in Europe. Maybe they might do it, but I don't know. Um, yeah, you can see here Reprieve. This is their main brand that they were trying to get before this whole thing happened. They were trying to get Reprieve to be mostly all their sales, and they were trying to make this their big thing. But you know, now we're in a freaking contractionary economy, and interest rates are up, demand is falling, and there was just a huge oversupply at the end of 2022, and this company saw the effects of it. Um, all right, this will officially be the end. I keep finding myself, like, when I'm about to end a video, I keep running it on. All right, guys. Well, if you're watching this, I hope you're having a great day in the stock market, and I wish you the best of luck. And this stock is something you should look into. All right, bye. Have a great rest of your day.